Whoa, what in the world just happened? The entire crypto market is in free fall. Bitcoin is tanking, Ethereum is struggling, and PiCoin just collapsed below key support levels. But here's the thing, I see this as a massive opportunity, and in today's video, I'll break down exactly why. We'll go over the real reason for this market crash, why investors are panicking, and most importantly, how you can position yourself for the biggest bounce-back opportunity of the year. So, if you're holding any crypto, or thinking about buying the dip, stick around till the end because this is crucial info you don't want to miss. Before we jump in, do me a quick favor, smash that like button, subscribe if you're new, and let's get right into it. Alright, let's break this down because this isn't just a typical market dip, this is something historic. Bitcoin is dangerously close to breaking below $79,000, a level that could signal further declines. Ethereum, one of the strongest altcoins, is also in trouble, rapidly approaching the $2,200 mark. Meanwhile, PiCoin took a massive hit, crashing by 17.3% in just a few hours. So, what exactly triggered this absolute bloodbath in the market? There are three main reasons behind this dramatic crash, and we need to take a closer look at each one. The Trump effect, a political shockwave in the markets. The newly established U.S. administration has just implemented a sweeping set of tariffs on imports from Mexico and Canada, marking one of the most aggressive trade moves in recent history. These tariffs, designed to protect American industries, have sent shockwaves through the traditional stock market, causing investors to react with uncertainty and fear. But here's the kicker, crypto got hit even harder. As global markets scrambled to adjust to this sudden policy shift, risk assets like Bitcoin, Ethereum, and other major cryptocurrencies saw a sharp sell-off. Investors, already wary of regulatory changes, interpreted the tariffs as a potential trigger for economic instability, leading to a mass exodus from high-volatility assets. This isn't just about trade, it's about the ripple effects that a single policy decision can have across financial markets, with crypto once again proving to be more sensitive to macroeconomic shifts than many had anticipated. Bitcoin ETFs flopped, the institutional retreat. At first, Bitcoin ETFs were hailed as a game-changer, attracting massive interest from institutional investors who saw them as a safer and more regulated way to gain exposure to cryptocurrency. For weeks, billions of dollars flowed into these funds, fueling optimism and pushing Bitcoin's price to new highs. But now, the momentum has come to a screeching halt. Inflows have dried up, signaling that institutional investors are pulling out. This sudden reversal suggests that big money players are no longer as confident in Bitcoin's short-term prospects, possibly due to macroeconomic concerns, shifting regulatory landscapes, or simply a desire to lock in profits before a potential downturn. With institutional demand weakening, the market has been left vulnerable, leading to increased volatility and further sell-offs. Ethereum panic selling, fear of falling behind. Ethereum has long been the dominant force in the smart contract space, but cracks are beginning to show. Investors are growing increasingly worried that Ethereum's next major upgrade might not be enough to keep up with the rapidly evolving competition. Faster, more scalable blockchains like Solana and Avalanche are gaining ground, offering lower fees and quicker transaction speeds, features that Ethereum has struggled with for years. As doubt spreads, panic selling has kicked in. Traders and long-term holders alike are dumping their ETH holdings, fearing that the network's upgrade won't be enough to maintain its dominance. This mass exodus is driving prices down even further, creating a self-fulfilling cycle of fear and sell pressure. With uncertainty looming over Ethereum's future, the market is reacting with brutal force. Global instability, a perfect storm for market chaos. The world's economic landscape is becoming increasingly unstable, and financial markets are feeling the pressure. Japan, one of the largest economies, is facing serious struggles, with slowing growth and mounting debt concerns shaking investor confidence. Meanwhile, in the US, regulatory scrutiny on cryptocurrencies and financial markets is tightening, adding another layer of uncertainty. With governments cracking down and imposing stricter rules, investors are becoming more hesitant to take risks. To make matters worse, the fear index, often used to measure market volatility and investor sentiment, is skyrocketing. This means that traders and institutions are bracing for further turbulence, pulling out of riskier assets like crypto in an attempt to safeguard their capital. When fear takes over the market, panic selling follows, and that's exactly what we're seeing play out across Bitcoin, Ethereum, and beyond. The opportunity amid chaos. Smart money is moving. Now, here's where things get really interesting. While the majority of investors are panicking and selling off their assets in fear, the smart money, seasoned investors, institutions, and whales, is quietly making moves. Instead of reacting emotionally to the crash, they're strategizing, positioning themselves for what could be the next big opportunity. The real question is this just another market downturn, or are we looking at a golden buying opportunity? History suggests the latter. Every major crypto crash has been followed by a powerful rebound. The 2017 crash? It was painful, but by 2018, the market had begun its recovery. The 2020 COVID crash? It sent markets tumbling, yet it also sparked one of the biggest bull runs in crypto history. The 2022 FTX collapse? It seemed catastrophic at the time, but it ultimately paved the way for a strong recovery in 2023. If history repeats itself, this latest downturn might not be the end, but rather the beginning of the next big rally. The question is, who will take advantage of it? Right now, we are seeing the same pattern. Weak hands are selling, while institutions and whales are accumulating. What you should do right now, my 3-step strategy for navigating this market. So, with all the chaos happening in the market, what's the best course of action? Here's my 3-step strategy for surviving and thriving during these uncertain times. Do not panic sell. The absolute worst thing you can do right now is panic sell. Selling at the bottom is a huge mistake that many regret. The crypto market is notorious for its volatility, and while prices may seem grim at the moment, remember that long-term holders typically come out ahead. Keep calm, don't let fear control your decisions, and resist the urge to sell into a downturn. Buy the dip. But be smart. While I'm not advising you to throw your entire life savings into the market, buying the dip strategically can be a game changer. Look into dollar cost averaging into strong projects like Bitcoin, Ethereum, and PiCoin while prices are low. This approach helps you reduce the risk of timing the market incorrectly and positions you to capitalize when the market eventually rebounds. Stay informed and prepared. The next 10 days will be crucial in determining the direction of the market. Keep a close eye on Bitcoin's $79,000 support level and Ethereum's $2,200 zone. If these support levels hold, we could see a bounce back, signaling the beginning of a major rally. However, if we break lower, brace yourself for potentially more downside before things turn around. Stay informed, stay prepared, and always be ready to adjust your strategy as new information comes in. What do you think? Is this the end or just another dip before we move? So, now it's your turn. What do you think? Is this the end of the bull run, or are we simply facing another dip before the market skyrockets again? Drop your thoughts in the comments below and let's get the conversation going. Just a reminder. This isn't financial advice, I'm simply sharing the plays that I'm personally involved in. The market is unpredictable, and it's up to you to make your own decisions based on your risk tolerance and research. If you want to stay ahead of the curve, don't forget to hit that subscribe button, turn on notifications, and I'll catch you in the next one. Let's keep pushing forward.